This was a bullish one at the Token2049 conference that David just came back from. We had BlackRock's head of digital assets, Robbie Mitchnick, laying out a sharp argument, which is that Bitcoin is evolving from a speculative gamble into a strategic necessity for institutional investors. He stressed that the key factor is Bitcoin's correlation behavior. So if Bitcoin stops moving like a risk-on tech stock and shows low or even negative correlation during severe market downturns, so-called left tail events, it could become a powerful hedging tool. And this would flip the institutional conversation from the question that they always ask, is Bitcoin too risky, to a new question, which is, are we risking too much by not owning Bitcoin? And BlackRock's CEO, Larry Fink, has become one of the loudest voices on this front, transforming from a crypto skeptic into a digital gold bull. And BlackRock, of course, oversees the iShares Bitcoin Trust, IBIT, which is now the fastest growing ETF ever. And Fink has even floated the idea that Bitcoin could hit $700,000 per Bitcoin if sovereign wealth funds make even modest allocations.
I would just want to start by saying that I can't help but still be slightly skeptical of traditional financial people embracing Bitcoin. And so I'm cautiously optimistic about their statements, but I'm still cautious about it, right? Now, again, even if you're cautiously optimistic about what they're saying, it still shows a huge shift in how kind of traditional finance, Wall Street, looks at Bitcoin and, perhaps how they allocate to Bitcoin. But I still think, like, he's talking his book, right? He has this ETF. He wants it to go up. That's a good thing. But I would still personally take what they say with a huge grain of salt. I don't know how you feel about that.
And absolutely. And I mean, not only that, if the entire thesis that he's laid out here hinges on whether Bitcoin can actually deliver on that promise of non-correlation, which so far has been pretty shaky at best, that non-correlation from tech assets.
Even gold itself during big sell-off events can be correlated, right? That's kind of the scariest moments, is when correlation goes to 1 across all assets, and that includes gold. Now, again, gold usually bounces back harder, and over the long term, gold is basically uncorrelated, kind of, with the market. Although, if you look at gold and the S&P over time, they both have gone up kind of together. And gold has gone up more now at this point with the recent sell-off. But, what exactly does this correlation thing mean when the S&P and gold have both been going up over the past, 50 years or something like that? I don't know. It's even that might be just a meme,